Yo, what is going on, guys? It is Johnny here. In today's video, we're going to be talking about the one thing that guarantees a reversal after a liquidity sweep or a continuation after a liquidity sweep. Now, I know a lot of people get fucked up on this certain topic right here, and I often get asked, how do I know if this is a liquidity sweep or if it's going to actually continue? And I'm going to show you guys the one thing that guarantees this. No, it is not order flow, but it does have to do with order flow. But I'm going to show you the secret sauce. Well, it's not really secret sauce, but I'm going to show you guys something that may help you in your trading. And before I dive into this video, I just want to say I did team up with Justin from Tactical Traders. So if you want to catch me there live trading every single morning with Justin from Tactical Traders, you guys can join in the description down below in my link tree. We have the monthly and the yearly package. But with that being said, let's get right into the video. All right, guys. So right here, I have two examples, right? I have not a liquidity sweep example and another example of an actual liquidity sweep. Now, I know most people here that watch my channel and watch my videos, most likely you guys know what a liquidity sweep is, right? So I'm not going to waste your time with that. It's just simply a sweep of buy side or sell side liquidity and then a reversal. But how do you tell, right? How can you tell that it's going to reverse? Because not all the time will you just get a liquidity sweep and it's going to reverse. Sometimes it'll look like this. You get a liquidity sweep and then down or up, whether it be, bullish or bearish. I'm showing you guys a bullish one over here and a bearish example over here. Now, how do I know that it's going to reverse or if it's going to continue? Well, very, very simple. It is simply paying attention to the PD arrays that caused that liquidity sweep. That's how you can tell if it's going to full on reverse and attack the opposing liquidity or if it's going to continue. For example, show you right here, right? Let's say this is a fair value gap that caused that liquidity sweep. If price respects it, meaning if there's just wicks and there's no bodies closing above this example right here, right? There's no bodies closing above this fair value gap. This is most likely going to continue, especially if you have another drawn liquidity a little lower, okay? It'll most likely respect this fair value gap that caused that liquidity sweep. And keep in mind, if you have more fair value gaps up top, price can wick up and attack those and then reverse, okay? Because I know there's going to be questions like that. Now, on a liquidity sweep over here, how do you tell if it's going to reverse? Okay, now I'm going to show you guys, right? Same example, you have a bearish fair value gap that caused the liquidity sweep. Now, what you guys want to pay attention to here is you guys want to make sure that price is displacing back up in the opposite direction that caused the liquidity sweep. For example, here, we swipe sell side, so now we want to see displacement back up, closing above the bearish fair value gap that caused the liquidity sweep, right? And it doesn't always have to be a fair value gap. It can be an order block, whatever it is, right? And then you can gauge order flow. Is it going to, push up, right? Most of the time, whenever we displace back up and we close above these bearish or bullish PD arrays that cause the liquidity sweep, most of the time, price that goes in the opposite direction after the liquidity sweep will leave imbalances or order blocks or whatever PD array that's going in the opposite direction. In this example, it's going to leave bullish PD arrays, right? It can be order blocks. It can be fair value gaps. It can be breaker blocks, right? Most of the time, it's going to be imbalances and order blocks, okay? So technically, you can use it as an inverse of that first bearish PD array that caused the liquidity sweep. You can use it as an inversion, okay? But most of the time, the price leg that causes displacement and closes above the bearish PD array that caused this liquidity sweep here, it'll have its own imbalances and order blocks and such. So if price wants to push up and attack the opposing liquidity after a liquidity sweep, this is the first sign that you want to see that, if it's actually a sweep of liquidity or not, right? So let's say we have another fair value gap up here, okay? Let's say we have another bearish one right here, right? That causes liquidity sweep in this leg right here. Then we come down into a, fair value gap on this price leg right here, this bullish one right here. And we respect it and we start pushing up, right? We don't see any real displacement back down to this bullish PD array after closing above the first one, right? We don't see any displacement down in this little price leg. And then we start seeing huge speed and huge displacement. You can expect any other bullish PD array to be respected until, it hits whatever opposing liquidity is left up here, okay? That is how you could tell if it's a liquidity sweep. If it's not, then it'll respect the bearish PD arrays that cause the liquidity sweep and then draw lower. As long as you have another draw on liquidity a little lower or above, whatever it is, whatever situation you are in on that given day, right? And I'm going to show you guys some examples here right now. So here I'm on the 1 hour chart, obviously, and again, price is fractal, meaning that this happens on all time frames. This can happen on the 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily, whatever. You guys know the gist, okay? So let's look at here, right? So we have relative equal lows here on NASDAQ. We obviously swipe liquidity, but then it just continues, right? But we don't swipe this low. So this is still considered a liquidity sweep, right? Comes up, closes up here, then comes back down. Obviously, this is the beginning of a new week. So this technically is a liquidity sweep, okay? But guess what? How do I know it's going to continue? Okay. The secret thing, or the secret sauce, it's not really a secret sauce, but you have to be paying attention to these fair value gaps that cause the liquidity sweep. That's a big thing. Pay attention to the fair value gaps that cause a liquidity sweep or a suspected liquidity sweep, right? Meaning just you think it's a liquidity sweep, you just don't have all the confirmations yet. And I'm going to show you guys, how do I confirm it's a liquidity sweep? Well, I'm going to show you. Okay, so here's the beginning of a new week. Obviously, we respect this 1 hour fair value gap that caused this liquidity sweep at these relative equal lows. New week opens, dips up into it, respects it, comes down again below these relative equal lows, okay? So it respects it. It may continue, but as you guys know, I really don't trade the new week opening. This is indices. I trade New York Open. So let's fast forward to the New York Open, right? For me, it's about 8:30 because I'm Central Standard Time. But here in London session, comes up, respects the 1 hour fair value gap again, right? We have no close above this bearish PD array that caused the liquidity sweep right here, okay? And then once we get into pre-market and market open, well, guess what? This candle closes above said bearish PD array that caused the liquidity sweep. So what can we assume here? The order flow is changing. It's literally that simple. It's literally that simple. That's how you know if it's a liquidity sweep. And if it's going to continue, it should respect the PD arrays. So if it was going to continue, right, this volume imbalance here and this fair value gap here, this bearish one, let me go ahead and delete that. This volume imbalance right here on the 1 hour chart for NASDAQ, okay, and this fair value gap right here should have been respected to move lower. Obviously, we did not move lower. Okay, we actually did clear this low. So we had another liquidity sweep right here. My bad. It didn't look like that whenever I was kind of zoomed out, right? Anyways, we cleared that low. And now our first defense for the bearish side, right, is this fair value gap. This 1 hour bearish fair value gap. Obviously, yes, it was respecting it in Asia and London session. And then, boom, guess what? Close above not just one bearish PD array, but two. What's the second one? This volume imbalance. Okay, look, we close above it. Next one, makes a low, pushes up, closes above it. Now we still have this one, right? Okay, London session comes in, comes down, boom, closes below the volume imbalance. But guess what? Now this is being used as an inversion. Okay, it doesn't want to close below it. And then pre-market for New York session comes in, and then boom, market open. So technically, whenever you see invalidations of bearish PD arrays after a liquidity sweep, this is when you can start to look for the order flow changing, and this is when you can confirm that, yes, that was a liquidity sweep. So what do you do with this information? Well, you can do one of two things. You can go on the lower time frames. If you already are on the lower time frames, you can market entry, or you can wait for the next candle. After the candle closed above the bearish PD arrays, you can wait for the next one to form a fair value gap, and you can set a limit right at the top of that fair value gap and place your stop below the candle that formed that fair value gap. So for example, if I were going to market here, right, this is a model in itself. This is nothing crazy. So if I wanted to market after this candle closed, this is very risky, okay? This is more of a higher risk type of strategy, but you can do this, okay? If you wanted to risk, or if you wanted a long in market entry here, this is a higher risk, right? And then you would pretty much attack the opposing liquidity here, okay? Or you could wait for the next candle to close or form on whatever time frame you're watching, and then wait to see if it leaves an imbalance, aka fair value gap, and then place your limit at that fair value gap. So it would look something like this. Obviously, they don't get hit all the time, but that's up to you and your risk and how much you want to place on each trade. But that's pretty much what you got to look for on a liquidity sweep. Whenever you have a liquidity sweep and you think it's a liquidity sweep, or you think it's going to be a liquidity sweep, look at your bearish PD arrays that caused the liquidity sweep. Are they getting invalidated? Are candle bodies, like, are the bodies of the candles closing above those or below those in whatever, scenario you're using this in? If they are, then that's a good sign. It probably is a liquidity sweep. And then you could look at, is the order flow changing to bullish or bearish? How do I know that? Is it respecting the PD arrays that it's forming after the liquidity sweep? For example, if we have a bullish fair value gap here, right, after closing above this one right here, that price respected about 2 times. Okay, let's go ahead and delete these lines here. We have a bullish fair value gap here, right? You can make the case that this can be used as an inversion, but let's just ignore that right now, right? We closed above this bearish PD array. Now we have a fair value gap there. As long as this fair value gap holds, because this is probably the only PD array that I see besides this order block here, which is overlapping in this fair value gap, which is a good sign. But I would be paying attention to this fair value gap here. So once we close it and then this one forms, this candle can technically come down and dip into this fair value gap if it wants, okay? And if it respects that and it starts pushing up, has a nice reaction off of that, then you could bet that this liquidity is going to get taken. And what happens on this day? It gets taken. Boom, right? Now let me go ahead and show you guys more examples of this. All right, so there's a few great examples here on this chart, on the NASDAQ chart. I don't want to drag this video out for too longer because it's a very simple thing to understand whether or not a liquidity sweep is a liquidity sweep or if it's going to continue, okay? So here on NASDAQ, we swiped this buy side liquidity. Notice here on the 15-minute chart, we do not have any imbalances or fair value gaps to the upside that caused that liquidity sweep right around here, right around market open. And then right when lunch hour starts, about 15 minutes into it, we have a huge displacement to the downside with one singular 15-minute candle, swiping this liquidity right there and also breaking structure. Now let's actually zoom into the 1 minute here on the same chart that I just showed you guys. Here we have relative equal highs that we just swept as well on NASDAQ. We have no closures above, no imbalances, right? Except this very small one, but we invalidate it here. Boom, right? And then we have these relative equal lows right there as well, okay? This is on the 1 minute time frame. Again, this is fractal, guys. So how do I know that this is a liquidity sweep or not, right? You have to pay attention to the bearish PD arrays that cause the liquidity sweep, right? We have 2 of them, actually 3 of them. The first defense is going to be this first fair value gap. The second defense is going to be this second fair value gap. The third one, and most not as high probable, to be honest, because if they start displacing above these fair value gaps, especially the first one and the second one, this one's probably not going to hold. And it is this 1 minute order block right here. So we have 3 bearish PD arrays. And obviously, it can wake up and tap into the second fair value gap. I'm not saying that it can't, but you have to pay attention to whether or not after a liquidity sweep, whether it is respecting, right, the said bearish PD arrays that caused the liquidity sweep, okay? So this one right here, this 1 minute fair value gap, notice how it's respecting it, right? Never close the body candle above it, and then we have a huge displacement to the downside. So here's the problem with new ICT traders. They're gonna try to aim for the one up here, right? And I get that, but you have to keep in mind that not all the time price is not gonna reach for those second, third fair value gaps. It's probably going to respect the first one. And if this was a true liquidity sweep off these relative equal lows, I would like to see a big green candle going up and validating both of these PD arrays and then going back to the upside with displacement and speed. Okay, that's the thing. If you think it is a liquidity sweep, right, you would want to see these bearish PD arrays that cause the liquidity sweep to be invalidated by long candles that cause displacements to the upside, right? This is an example of going to the downside of sweeping liquidity, of the sell side liquidity, right? You want to see long candles going up, going the opposite direction after a liquidity sweep, invalidating these bearish PD arrays that cause the liquidity sweep, right? And I'm not just talking fair value gaps. I'm talking about like order blocks, shit like that, right? But most of the time it's fair value gaps because price leaves imbalances, aka fair value gaps. Okay, so if you think it's a liquidity sweep, again, you want to see displacement up and you want to see closures, body candle closures above, said bearish PD arrays or bullish PD arrays, whatever you're looking at, right? So let's say you get in here and then it starts displacing down. This is what you want to see. And then you would attack these equal lows down here. And that causes a 15-minute break of structure. Okay, check this out, guys. So we have a huge displacement to the upside. We're invalidating. We don't really have huge bearish PD arrays. This one already got respected, right? This fair value gap here respects it, moves lower, swipes liquidity. Okay. Now, do we have any imbalances right here besides this one that caused that liquidity sweep right here, right at these lows in the morning, right? Do we have any imbalances right here? Maybe on the 1 minute. Yeah. Let's go look at the 1 minute real quick. Okay, boom. This is the 1 minute chart, right? So we do have a fair value gap here that caused that liquidity sweep right there. Boom. Okay. And what happens here? We push up, close above it, dip into this fair value gap. Now, what I say a little while ago, whenever you have a strong closure with speed and displacement like this above that bearish fair value gap that caused that liquidity sweep, and whatever you're looking at, whatever time frame, right? You want to wait for this next candle to form and see if it forms a fair value gap as well, right? See if it forms an imbalance, and it does. And right as soon as that candle is about to close, you would want to set a limit at that fair value gap at the top of it, and then you'd want to set your stop below the candle that formed that fair value gap, right? The low of the candle that formed that fair value gap. In this case, it would be this. And then on your higher time frame, obviously, you would want to aim for the higher time frame draw on liquidity, which would be up here. And look at that, it hit it, right? This is a 6.3 RR. Now, obviously, yes, this is hindsight, but go and backtest this. Go and backtest this. It's absolutely, it happens all the fucking time, okay? So you just have to make sure whenever you get a liquidity sweep and you think it's going to be a liquidity sweep, just make sure that bearish PD arrays are getting invalidated, and that's going to give you confirmation on, you know, whether or not the order flow is changing. Because if this was not a liquidity sweep, then you would expect this bearish PD on the 1 minute to hold and bring us lower to whatever other liquidity is to the left of us, right? You would expect this bearish PD array or another higher time frame bearish PD array to hold, okay? We obviously have an order block right here on the 1 minute and a fair value gap on the 1 minute. So why wouldn't this hold if it wants lower? Because I see way too many of you guys are trying to sell at the lows for whatever reason because you think it's going to keep dropping. This fucking video is going to save you guys. Okay, this video is going to save you guys. I promise you. This little concept, this little video, this little strategy is going to save you motherfuckers that try and sell after sweeps of liquidity, which I don't know why you're trying to do, okay? You need to pay attention to whether or not order flow is changing, and this is how you gauge it, right? This is how you know if a liquidity sweep is a liquidity sweep or if it's going to continue, right? If it's going to continue, it's going to respect the bearish PD arrays that cause the liquidity sweep, and it's going to go lower, okay? If it's not going to continue, and if it's actually a liquidity sweep, it's going to close above them with a nice long candle, right? Whether it be to the downside or the upside, and it's going to, you know, change order flow. It's going to leave an imbalance in the opposite direction, and it's going to attack the opposing liquidity that's left, okay? Like this, right? Dips into it, pushes up. Huge, okay? First TP right there, second TP up here. All right, here's that same example, right? We have this bearish PD array on the 5 minute that caused that liquidity sweep. Guess what, right? You think it's reacting to it, boom, closes above it. All right, then it sweeps that liquidity, okay? Now, what do you want to look for now? Okay, do you want to go long because we have a break of structure here? A lot of newbies might think that longs might be the move here, right? Because we have this huge fair value gap on the 5 minute. I think we also have one on the 15 minute in this example. But we have this huge 5 minute fair value gap right there. And we have new liquidity down here, right? And we also have this high that didn't get swept, right? Well, if you drag this 5 minute fair value gap over, you see that it respects it. And then we start invalidating bearish PD or bullish PD arrays on the 1 minute. We start closing below them, right? And then we have this huge 5 minute candle that absolutely closes below this 5 minute bullish fair value gap, right? We have a break of structure. We have a fair value gap. Why wouldn't you want to long this? I know people got burnt here trying to long this. But you got to wait. You got to see and wait if the 5 minute is going to respect the said bullish PD array on the time frame that you're looking at, right? On the 5 minute for this example. It didn't. It closes below it. Then it comes down and swipes liquidity. Now, what did I just say? If you want to see if it's going to continue. Now, what's the draw here? The draw obviously is going to be this low over here, right? Now, what I just say a little bit, like, what have I been saying this whole fucking video, right? Whenever you get a liquidity sweep, you want to see the bearish or the bullish fair value gap or PD array to be respected that caused the liquidity sweep. And guess what we have here, right? Liquidity sweep, next candle forms. What does this candle do? Taps into it. So if your drawing liquidity is here after seeing this huge displacement close below this bullish fair value gap that caused the break of structure, right? Once you see that and you don't see this high get taken, you're fucking bearish for the day. And you should be aiming for this draw on liquidity. Which, guess what? Gets fucking tapped into about 25 minutes later. Okay? And what did I just say a little bit ago? Once you see this next candle form and you see an imbalance, you could set your limit at the bottom or at the top of the fair value gap, whether it's bullish or bearish, right? In this case, it's bearish, so you would set it at the bottom of the fair value gap. So it would look something like this. Boom. And then you would place it at the top. See, my short position tool is already used to me doing this shit, right? And then you would aim for it to 2RR. Is that not good enough for you guys, a 2RR? Like, I feel like a 1-to-1 is even good sometimes, right? And there you go. That's how you know if a liquidity sweep is going to be a liquidity sweep or if it's going to continue. And yeah, hope you guys enjoyed this video. If you did, please leave me a like, comment, subscribe. Let me know what you guys want to see next. And if you guys want to trade live with me and Justin from Tactical Traders, I am in Tactical Traders. I teamed up with them. We have the monthly and yearly package in the description below in this YouTube video. So I'll catch you guys in the next one. Peace.